Good morning, Ayton here, dog walking, and what about that then? It's absolutely like a mill pond. It's dead calm. It's it's not even 8 o'clock in the morning. It's already pushing 70 degrees, and yeah, it looks like I wouldn't say summer's arrived in the UK, but it certainly feels good. In the last few conversations, one of which we did a reach out to founders and entrepreneurs, and yeah, we had a good influx of new projects and new opportunities to look at. But I think it's worth reiterating what's really going on out there, because there's a lot of, I think, misunderstandings, misperceptions about raising capital still, and a lot of people talk about, say, well, raising capital, it's hard. Well, it is hard, but it's not hard for the reasons that you think. It's hard because there's a lot of competition out there, and there are tens of thousands of people with great ideas, great products, great services, something to show, and you have to be aware of how to compete for attention. And you've got lots of different investor groups. So we have, funds, VCs, we have angels, we have high net worths, we have private equity, of course, and you have family offices. So there's an enormous amount of people that you can go after. But so here's the thing, right? And I want to break it down so it's logical. If you've got an idea, it's incredibly hard to get you funded. Unless you're a proven serial entrepreneur that's turned ideas into a range of different successful exits, then it's difficult to get backing. And if you go to investors, they're going to say, well, if you've done it before and had a good exit, why aren't you putting all the money in? So, putting money behind your own belief. So there is that to consider. And then, of course, you have the thing about people raising money. We have it all the time. And I say, Nick, we need to raise 200, 300, 400k because we need to make a prototype, and we need to get something built. Well, I'm sorry, but that's not good enough. It's not a lot of money to make a prototype. There are software tools, there's lots of things out there you can do to make a prototype product and to demonstrate your idea, your concept, and what you've got in mind. But are investors really keen to lend you money to build some software? If you've got a great idea and you want to build some software and you don't have a history of software development, then it's a high risk. It's a high risk factor for the investor. So those are two things. You've got an idea, do you want to get funded? You've got an idea and you want to build a prototype, and there you have it. Those are often the foundations that we work with. And at that end of the market, you're really looking at angels. And angels, to a certain extent or a lesser extent, they might take a punt. And some angels will come in at 10k, some will 25, some will do 50 or more. But the mentality of an angel is they have a higher tolerance to risk, but they invest in lots of different companies, and their portfolio analysis is that one of those companies is going to be successful. And by doing so, you're playing the odds, aren't you, as a portfolio? The third area I want to talk about is where you've actually got products, you've actually got a service, but you've got something developed. You've got a prototype, you've got something to show, but in a sense you're pre-revenue, and you're maybe trying to raise some money. You put a sweat equity in. You may have actually raised a little bit of seed money, but you're now at a point where you need to get the product out there. But you've got this MVP, but you're the product market fit is what the investor's looking for, isn't proven yet. So you've got no paying customers. One of the ways, of course, you do this is you get your product out there for free or a very minimal cost. And we've done this a lot ourselves over the years. And then you're trying to gauge feedback, and you're trying to get some insights, some user experience on some of the early versions, so you can refine it, improve it, and so on. But it also helps convince the investor, of course, that there is potential market traction here, and with injecting further capital, you can go even further. But those are the opportunities that we look for, where you've got something built, created. It may not be complete, you may be pre-revenue, you may have a little bit of revenue, but we like that because that is a potential for growth. And therefore, in our network, we know about growth, we know about scaling, we know how to open doors, we know how to help founders win new clients, and we have a massive network, of course. So for us, that's highly attractive, and other investors are the same. You're at that inflection point where there's potential in your product and you just need capital. And then obviously the next evolution is where you have some customer revenue and you've got good pipeline. And again, you may not be in profit and you may not exactly have enough revenue, but you want to grow the business, you want to expand internationally, you want to increase your channels, move to version 2 or version 3 of the product, which you should be cautious with. It's always better to sweat what you've got first if you can. And there you're moving into the sort of like the pre-A round. This is the sort of 500,000, 1 million, 2 million. And there are games to be played in that pre-A round. There are ways of doing it strategically. So we'll leave it there for the moment, and in the next conversation we'll obviously cover the next stages. But I thought it was worth reiterating that it is tough out there, and we'll talk about the nuances of how do you stand out in the next conversation.